Right, folks, welcome to the Orderflow class, introduction class for beginners about Orderflow. Okay, since you guys are asking me a lot about Orderflow contents in the Discord and the channel, right? So I planning to do a series about this Orderflow videos, right? But to do this Orderflow videos, I need the cooperation and collaboration of all you guys since we hit 3,000 subscribers. Okay, I will need in this video at least 300 likes and 300 comments. It's very easy. Okay, if you guys do your part, anyone, we can proceed with the second class. Okay, but for now we need this goal of reach 300 likes and 300 comments in this video. Okay, if we hit it, I drop the lesson number 2, so it's up to you guys. So that, let's begin the first class about the order flow content. Okay, and it will be about the auction market theory. Okay, the auction market theory is the supreme theory about the markets and how the price moves and how the price goes from one place to another place. Okay, how liquidity actually moves, how liquidity actual works in the market. Okay, not the ICT bullshit about liquidity. Okay, so in this class we're going to learn deeply how professional players and professional market makers and smart money players and funds and whatever, they actually act in the market. Okay, so said that, let's start with the basics. Okay, I need to explain to you guys the basics of supply and demand to understand what comes after. So the basics of supply and demand, let's see, you have a small store, small market in your town. Okay, and in this market you sold potatoes. Okay, this is the potatoes, right? And you sold these potatoes for $7 a pound for your final customer. Okay, so the final customer comes here to your market and grab these potatoes, okay, for $7. In order to sell these potatoes for $7 for this guy little here comes to your market, okay, you need to buy these potatoes cheaper than you sell, right? Pretty obvious. So what you do, you have like a, let's put here a producer of potatoes. Okay, you have the potato producer right here. Okay, so a large like farm or something like that. You have a van, so you took your van right here and come to this place, and in this place the producer of potatoes, they sold the potato to you right here, right, for $2. So you came here and you load up your truck with the $2 potatoes. Then you come to your market and put these potatoes to sell here for $7. Okay, so the potato here is $7. What is this means? This means the basics of life. Okay, there is supply and you have demand. Okay, so where is your demand? Demand is here. Okay, you have the final customer, that is your demand. This guy is demanding buying the potatoes. Okay, you have the urgency to buy the potatoes, and this guy here is the supplier of the potatoes, supplying potatoes to you and for this guy as well. Okay, so you have supply and you have the demand. And if you have more supply here, you have more potatoes, like a lot of potatoes right here and a lot of potatoes in your market, right? And you don't have this person to pay $7 potato, the potato price will eventually and gradually drop, okay, to $6, to $5, to $4, until find someone, some little guy here, is willing to pay the $5 for the potato, because you have a lot of potatoes. You need to sell these potatoes, and if you're willing to sell for $4 for someone, okay, that's the deal. The same thing here. If you don't have this guy here producing potatoes, okay, this guy only produced the half of potatoes he used the produce, and you have a lot of people right here willing to buy his potatoes. Okay, in this case, these potatoes right here, because you already took these potatoes and come here, but the potatoes that you have is only these potatoes right here. Okay, so these guys needs to buy the potatoes, but it's not enough potatoes for everyone. What happens? The price of potato will eventually and gradually come higher because these people needs the potatoes and are willing to pay more for having these potatoes. Right? So this is the basics of the supply and demand and works in every aspect of the life. Right? So now we start to aggregate this whole philosophy on the price, okay? And how the price moves, right? And right now I will draw a potato book of offers right here. Let me draw a little bigger. We have a potato, and here we have the potato price, okay? Right, so we have $1, $2, $3, $4, $5, $6, $7, and $8. This is the potato chart, book of offers. Okay, the current price of the potato is $3. Okay, the average price of the potato is $3. What I need in this, remember, this is how the price moves. What I need for the price goes up or the price goes down is the necessity, the urgency of having or selling those potatoes. So if I have more people wanting to buy the potatoes, eventually these $3 potatoes will over, okay? And then you have only the $4 potatoes, and people going to start to pay $4 for the potatoes, right? If this $4 potatoes over, we will begin to pay $5 in the potatoes, okay? And this $5 potatoes over, we come to $6 potatoes. That's a one, right? And for the price drop, what we need to have, we need to have like a lot of potatoes right here, and the people doesn't buy this $4 potatoes because people don't want so much potatoes in the season of the year, right? So the potato now is $3, right? And if we have like a lot of $3 potatoes right here, and the people don't buy these potatoes, they're gonna drop the price of the potatoes to try to sell for these people right here, right? And the same thing, if you have a lot of $2 potatoes and no one's buying the $2 potatoes, you're going to drop the price to try to sell for those people that don't want the $2 potatoes, right? So this is how the price moves. So you need the aggression of the price, right? You need people willing to buy or willing to sell cheaper or expensive, right? And here we have a real market example of this, and I bring to you guys. Okay, so here you can see, make it a little larger. Okay, here you can see this asset is being negotiated at this price, current price right here. And here we have the sell offers, sell limit orders of this asset, and we have the buy limit orders. So here we have all the buyers right here, and here we have all the sellers. Okay, so this every price level right here, it's sell orders. So now in this current price, we have 286 sell orders. In this price, we have 490 sell orders. In this price, we have 685 sell orders. Okay. In order to this price move from somewhere, okay, up or down, we need aggression. Okay. And by aggression, I mean, I need these guys right here, the buyers, okay, are willing to pay this orders right here at this price. If these buyers consume all of these orders, okay, the price will now comes to this level right here. In this level right here, we have 490 orders that we need to consume all those orders to pass to another price level. And then we need to consume all these orders to pass to another price level. need to consume all these orders to pass to another price level. Okay, so buyers need to aggressively buying all those orders right here and accepting paying worse and worse and worse and worse and worse and worse this asset. Okay, which means they are urgent to have this. And it's the same thing for the sellers. In order to this drops the price, the sellers need to accepting sell their asset for lower prices, even more and more. So we need to sell for this price, need to sell for this price, need to sell for this price, this price, this price, this price, and the price will continue pushing down until the sellers think, oh, this is too cheap for me to sell what I have, right? So they will stop selling and aggressively selling their assets. So this is how the price works in the real market. This is a real book of offer in the market. So said that, this is the basics of supply and demand that you guys need to know. Okay, so now we got into the actual market theory for real. Okay, so the first thing we need to understand about the auction market theory is the market is auction, right? And this is the auction of the markets that I just showed you. Okay, so here you have the buyers, you have the sellers, you have the product and the price of the product. So you have instantaneous auction in the asset. Okay, for that we need to understand a little about statistics, okay, for the auction market theory. And the first thing I need to talk about to you guys is the standard deviation and the bell curve, okay, which is this guy right here. Okay, and some of you guys know about the standard deviation and bell curve, some of you guys don't know about, and that's okay. If you study some statistics or mathematics, you're going to know about this. If you're not, that's okay, I will explain to you. This is basically the average, okay, of something. So I have some research right here, I think I can explain better, but in general we have the average of something right in this middle, and this 2.35.1 here, and here we have the accidents, right? So you have a small portion of things out of the average, okay, small real portion. The most far away you get from this point, okay, the less it's going to be something or someone in here. Okay, so let's illustrate this a little better. I get some examples right here. For this is the monthly distribution of monthly spending dollars, okay, the average person of the United States. Okay, so the monthly expending, you see a few people spend less than $1,000 and a few people spend more than $3,000 a month. The average spending, okay, it's between 1.5 and 2.5. Okay, this is the average spending of the country. Okay, here we have birth weight grams, so newborn babies. Okay, you see the weight right here. Okay, so very few babies born with 1.4, 1.7, and the vast majority of babies come to 2.4, 2.6, let's say 2.6 right here, until 3.8. Okay, this is the average baby weight. You have few coming here, have a few coming here, almost no one. Okay, so this is the average baby weight. Okay, and this is the, I guess it's the cancer, some kind of cancer research, I don't know. So this is the age for patients with negative biopsy. Okay, so you see the biopsy is going negative on this age of patients to the 16 to 80s. Okay, and you have a little few people with 50 and 90, and here we have more increase for negative biopsy. No, this is the negative biopsy, sorry, and this is the positive biopsy, and you see the most part of biopsy comes here between the 60 and 70. Okay, so the standard deviation and the bell curve, okay, is average measure that we can have. Okay, so how this applies to us in the market, right? And how this applies to us like every day. Well, if you only take this image, or take this image, or take this image and rotate this image 90 degrees, you're going to have this. And this, guys, is the volume profile. Okay, this is the most important and only indicator that you need to have. It's not even an indicator, okay, but you can call it an indicator, okay? But this is the volume profile. And this shows us, okay, where the most contracts are negotiated in the markets. So this is the most interesting regions for the market negotiate. So what this means? What this means is in these regions right here, okay, these regions right here, we have the most interest in the players to negotiate right here. So what it means is the players think it's a fair price to negotiate right here because we have the most volume, which means they are comfortably enough to negotiate in this area. Okay, they are comfortably negotiating here. So you have a lot of buyers, a lot of sellers, the price is fair. That's no problem at all. You see here, you have a small willing to negotiate right here for the players. You have small volume. Players don't want to negotiate in these areas at all. You don't want to negotiate here. Players don't want. Okay, it's not worth for the players to sell here, okay, or to buy here. So you have the most interest part in the market here. So here you have the volume nodes, right? And this is a high volume node. Let me put in black. High volume node. This is a high volume node. This here, it's a low volume node. Low volume node and high volume node. This is important, right, guys? All right, so now we have our market profiles and volume profiles of our market. Okay, so how can I use this shit to take some advantage or like a cheat code about this? Okay, and that's comes the important part. Let me zoom a little bit. Okay, so here we have our volume profile, okay, right here, and we can see right here that we have the most interesting area for negotiation and the last interesting area for negotiation right here. You see a lot of low volume here, and a high volume here. This is awkward, but anyway. Okay, so you have this kind of scenario right here. Okay, so here you have your high volume node, and here you have your low volume node and low volume node, right? So what you can assume looking for this, players want to negotiate in this area right here. Okay, said that, we have some important regions to discuss right here, such as this value at a high, the value at a low, and the point of control. Value at a high, this level right here, okay, and our value at a low is where we have the most volume. Okay, so we have the volume, the most volume, and this upper part is the value at a high, the lower part is the value at a low. Okay, you have seen this in this part, the volume ends up right here, ends up right here. Okay, what is this? This is the unfair max, I'll put this, and unfair minimum. What means this? What means the price comes here and make a minimum or make a maximum, and this is an unfair price because players don't want to deal in this price range. Players want to deal in this price range right here. This is an unfair price for the maximum and the minimum of price. Okay, and here we have the point of control, which is the most negotiated price of this whole session right here. We have the most contracts depending on this price right here. So we can say is the middle price of our guys, right? So this is a way we see the volume, okay, and how we can take advantage from this. Okay, I will not talk about scenarios right here. I will not talk about entries, okay, but the only thing I will talk here in this video is the price always tend to look for this volume right here. The price always tend to return to the most volume area, okay, and if the price doesn't return for this volume area, the price will likely find a new volume area, and this phase right here, we call it price discovery, because price will find another value area, and the market doing this, so on and so on. Okay, and now we find a new value area, and price now comes and find a new value area. So dealers have enough liquidity to negotiate it at this price levels. So okay, said that, now you know, okay, what is supply and demand, what is bell curve and standard deviation, right? And you know how the volume profile works, you know what to look in the volume profile, right? So now let's set and configure your volume profile on your chart, so you can easily spot all those things that we spoke of it. I will erase this. I only let this one right here because I want to show you guys one thing that's really important. Okay, so I will erase all this order flow right here, all this drawings right here. Okay, and how to set and configure your profile, volume profile. Okay, so here we have a chart. I meant the gold chart, but whatever, doesn't matter. In fact, you can come in indicators. Okay, this is the most easy way. Okay, come indicators and search for session volume profile. Okay, session volume profile. This here can be session volume profile normal or AG, whatever, doesn't change. Okay, and you put here. Okay, so I think, okay, now that's I have my volume profile right here. So what I do right now, because I have no value area low, I have no value area high. Okay, so double click it, right? And inputs, you see by default, this value area number right here comes 70. And what's this 70 means? Okay, and this is why I kept this image right here, because this 70, right, it's a conjunction of this both zones right here. Okay, 34 plus 34.1, we have 68.2. Okay, so this is what it means, the 70. Okay, if you want like a more precise thing, you can put 68.2 right here. 68, okay, that's no problem. Slightly different, but it's almost the same thing. Okay, so you can set on 70 here. We come this by default by 70 for round purpose, so that's no problem. You can let it 70, but just for you guys to know, this 70 here, volume area, value area volume, okay, this 70 means this 35, this 34.1, and plus this 34.1. Okay, right, so now I can erase this image and all this shit. All right, so let's configure your volume profile. Okay, so here you can set up and down. Okay, here you can ticks per row, and here you change to 2. Right, so I have to change the asset because the gold is currently having some troubles. Right, so you got to 2 right here, right? And now you see that you have a better volume, that you only use like 24, and number per rows, you got this, not cool. Okay, so ticks per row, put 2, okay, and now you have a correct volume profile, more refined volume profile. All right, so in this style, okay, you're now going to activate your value at a high and value at a low. The point of control I like to set as red, okay, And if you want to Instagram box, like the session box, you can leave it, or you can just remove it like this. And this, you can change the colors if you want it. You can put like black or some color that you want. Okay, up volume you can put like green, down volume red, up value green, and red if you want it. And you see the buyers and the selling volume right here. Said that I will not let this color because this is terrible. Okay, I'll let at least blue and black. Right, so here you have it, your volume profile. If you want to extend this value area highs and value area lows, you can extend. Okay, extend, okay, and it will extend these areas, but no need to do it like this. So this is extended right now. You see, I personally don't like to have this extended, because we'll see in another classes that we use a weekly volume profile to perform better. But the session volume profile is also very good. Okay, you can use it, and I use in confluence with the weekly volume profile. Okay, so now we have set your volume profile that in your charts, and for today's class is this. Okay, guys, and don't forget, we have the free Discord community that you can join. Okay, so click the link below, the link is in the description, and join the Discord community. Okay, that's free to join. And we have the live room that I trade every day at the live room. Okay, and we have the swing trade room that I send all the trades there. Okay, so just remember, 300 likes and 300 comments, we go for the part 2 and how to use all those shits that I explained to you guys right now. Okay, so that's it for today, guys, and I hope you guys stay well till the next one.